Hello, everyone. Welcome to this webinar being presented by Towers Business Development. I'm the Managing Director of Towers Business Development, and I'm looking forward to having our conversation this afternoon on today's topic. The innovation journey is not a closed shop. Some people think it is. So let's just get underway, and you can make up your own minds as to what you think. If you're watching and you have any questions, please go to chat and type in your question, and I will answer it during the webinar. But if you're watching this at a time more convenient to you and you have a question, why not send me an email with your question, peter@towersbusiness.com.au. Where does innovation start? It's normally an idea. Someone's had a flash of inspiration. It may have come about during these lockdowns that have affected many in Australia over the last 15 months. Or it might have come about because people have been working from home, haven't had the daily commute to eat up that extra hour or even 2 hours for some of you. And you've been sitting at your computer or in your shed or on your farm, or just going around a golf course, and you've got an idea and you've started looking at it. Well, what do you do with it? It's a good idea to write down what you thought, especially if it's one of your 3 a.m. thoughts as to what you could do with something. And the logical question that many people come up with is there government support for an idea? And who can claim government support? So there is, from the Australian government, a support program which is referred to as the Research and Development Incentive Rebate. But it's only available for companies to claim, and the companies must have kept the records that are required by the legislation, which is embedded within Oz Industry and the Tax Act. So the whole idea is that you have to research the idea, the proposal, the concept. And the first thing you need to do is probably create a project and a small team so that you can get some feedback as to whether undertaking that task will be beneficial. Will it save money? Will it create a new asset that could be sold? Because research and development should always be on the basis that you're going to be creating a business asset, something that is valuable that you can make money from. It's putting a value on intellectual property. Surely that's why you're doing this. If you're running a business, you're not going to be allocating 2 or 3 team members for a considerable time. Even the preliminary work to prove something up needs to be undertaken on the basis that you're going to have a worthwhile project. So the small team works on it, and you are able to undertake some preliminary investigations. And they're very important if you're going to claim the Research and Development Incentive Rebate. If you're not going to claim it, you don't have to worry about some of the things that I'm going to be talking to you today about. And there's documentation required if you're going to be making a claim on the tax office as part of the company's income tax return. They require proof that you've undertaken this research and development activity. And the first search that they require you to have conducted is prior art search or prior literature search. And that's not just in Australia, it's worldwide. These days, with the World Wide Web, it's a lot easier to conduct these searches, but please print out what you find. If you search for a particular item and you cannot find anything on it, please type out the search inquiry that you made so that it's clear that you were unable to receive any sort of feedback one way or the other. And in that case, it's going to support your argument that no one else had ever done this, because that's what this is about. The Australian government is not going to supply financial support for any company to repeat research and development activities that have already been undertaken somewhere in the world. And they have published it and promoted it because someone else really owns that idea. The next key item is to identify the core activities that are proposed. How are you going to go about proving this concept? So we need to have identified at least one core activity that needs to be determined. And you need to be able to identify what new knowledge you're intending to produce. What are you trying to achieve out of all this? What problem are you trying to solve? That's the new knowledge. And then we need to identify the hypothesis. Now, the hypothesis is a positive statement of a belief that the experiments then sets out to prove or disprove. For the research and development incentive rebate, it doesn't matter if you disprove what your original thoughts were. And as long as you keep the documentation, you can claim that expenditure exactly the same way if you were able to prove your hypothesis. The key thing is to keep the documentation, the process that was adopted. Now, if you think about how universities operate or how you think they might operate when it comes to research activities, this is really how the government has framed these requirements. That you identify an hypothesis, you write it down, and that's what the experiments that you're going to conduct are either going to prove or disprove. Now, many companies will be appointing other people to assist in this process, professionals, universities, or other experts, or tradies who can assist in part of the process. You need to record who those people are. You need to make sure that appropriate documentation has been signed before you make disclosures to them. So we want confidentiality agreements and ownership of intellectual property rights to be sorted out first. You don't want to start trying to sort that out well down the track when you've developed a new product, process, or service that may have some real, hopefully it will have some real value in the marketplace, and a consultant saying to you that he owns 50%. You need to sort that out at the beginning. And also, who are the team members that are going to be involved? And make sure you have confidentiality agreements and non-disclosure agreements signed by them, and make sure that their current employee agreement covers what they may be doing on a research and development activity. So who are the team members that are going to be involved? And then the recording of time comes into play. All of the time that these people, both your own team and the external consultants, need to be able to account for their time. You just can't charge $1,000 to research and development. It needs to be broken down to how many hours did the first person work on the project? What did they do? Now, you can have standardized descriptions for the work process. I've just finished working with a client that's got over 100 of these work descriptions. They give a number to them. So the team member can type in or insert onto the form or onto their phone the work description number to facilitate the record keeping process. And if there's invoices being received from contractors and other people that are being allocated to research and development, they need to be allocated to the specific research and development project, because you could end up having more than one project being undertaken as part of this overall exercise. You may have come up with a number of hypotheses that are different so that the recording can be shown separately to get the costs. And one of the key questions that gets asked is, could the experiment be known or determined in advance? Could the outcome of the experiment be known or determined in advance? Now, if you can answer that yes, you're not going to be able to claim any research and development incentive rebate. You need to be able to answer it no and be able to defend that answer if you're called upon to do so. It's a good idea to produce a research and development plan for a company with a turnover under $20 million. That is not legally required, but it's a good concept, because that's going to make your team think through what you are really trying to achieve. And I think there should be a budget associated with every research and development plan, so that the board of directors who should approve this undertaking have got a clear idea that this project's going to cost $35,000. They don't get a surprise when they thought it was only going to cost $500. So let's briefly consider the research and development incentive rebate. For companies with turnovers under $20 million, it's 43.5% of the research and development expenditure. Now, a lot of that will be labour and labour on costs of the team that have worked on the project. So it can add up to being a fair bit of money. And some small businesses are making claims of $1 million, $2 million, up to $4 or $5 million. And the big end of town claim a lot more. So the research and development system needs to be implemented. Our associated company, ESS BIZTOOLS, has developed a very extensive research and development system, which we are able to install into the clients of Towers Business Development. And in fact, as part of that process, we supply a white label version of that system to our clients, because you need to be maintaining the records on your system. So that's the research and development exercise. Company can claim a cash refund of the research and development rebate if the company is trading at a loss, and as long as the losses exceed the rebate amount. You indicate on the tax return, so your accountant would give an indication that you'd like to receive the refund. The tax office generally process those refunds within 30 days of the company tax return being lodged. Now, that's subject to the company having lodged its annual return to Oz Industry prior to the date of lodgement of the company's tax return. And in any case, that registration has to be made by the 30th of April following the 30th of June year. So for the year we're about to go into, or about to end, 30th of June 2021, the return to Oz Industry has to be lodged by 30th of April 2022. If you want to know more about research and development, please let me know. Let's move on to the Australian Government grant to assist innovation. This is a very important grant. It's called Accelerating Commercialisation. And it supplies grants of up to $1 million to assist commercialization. It applies to companies with turnovers up to $20 million, but it could be naught. And in fact, quite a number of the applicants have got no turnover. They're brand new companies. And it covers the activities from prototypes. So accelerating commercialization does not fund the prime research and development activities, which would normally take you through to developing a prototype, but it covers the costs from a prototype until you can make your first commercial sale. And the first commercial sale can be a long time away after you've developed the prototype. And there's a lot of money to be found at times. And incidentally, the grant from the Commonwealth is only 50% of the total project cost. So the $1 million, if you're getting $1 million, you have to match it with $1 million. You don't need that money on day one, but you need to be able to satisfy the entrepreneurs program, which is part of Oz Industry, that your company has the ability to have your share available. And that project can be over 2 years. So the money doesn't all have to be there 2 months after you get approval or anything like that. So it's covering the activities from the completion of the prototype through to the first commercial sale. Now, the government has targeted accelerating commercialization at 5 growth sector industries. And these are advanced manufacturing, oil, gas and energy, medical technologies and pharmaceuticals, mining equipment technology and services, food and agribusiness. Now think about that as X the farm gate. It's what happens to food and agribusiness products once they're outside the farm gate. But as well as that, this grant also applies to what's termed the enabling technologies and services. These industries, if they have supplied services to any of those growth sectors, can also be included within the eligible companies. Freight logistics, infrastructure, related construction and services, information and communications technology, digital technologies, professional services, but it's restricted. It's basically weather forecasting and that type of activity that comes under professional services. So they're the industries. There's a lot of them. When you really sit down and analyze it, many trade-related businesses fit under related constructions and services, but they must be doing work for a company that is able to be defined as being within a growth sector. Now, if you can do that, you basically can get a grant of up to $1 million. So what's included? The salaries and salaries on costs from the prototype onwards. Now, once you get a prototype, there can be a lot of toing and froing in the design of what the final product's going to look like. You take it off to all sorts of other experts, and they make various changes to make the prototype look more acceptable to the consumer. It might be in the wrong materials. It mightn't be the right color. It might not fit properly on a wall or in a shower recess. People might complain it's going to be hard to clean and maintain. So changes get made. The Accelerating Commercialization Grant will fund those sort of costs being made. And some of them will be expenditure that your own team are involved in. That's why we've got salaries and on costs. If you need materials being purchased to enable those changes and indeed to create anything to be done, you might need to develop further prototypes. So the expenditure in doing that can be covered under this grant. And it's costs to get the business into the finalization of commercialization so that sales can be made. So let's think about what some of that could be. What could you encounter? It's very hard to do anything in this world without legal agreements. distribution agreements, training packages, installation packages, all that type of work. The grant will not fund the actual implementation of a marketing plan, but it will fund the development of a marketing strategy, because you need all that to be able to get to that first commercial sale. So that's how you need to think this through. And then you need to document it in the application and show the costs in the cash flow forecast you have to submit. The grant will also cover the development of a business plan, which could be utilized, of course, to help raise capital, if that's how you're going to get your share of the funding. The company may be able to fund it out of its own other products that it's already producing. But many companies find that they need to get money from some other source. Now, it might be loan funds submitted by a director or shareholder, or it could be some of the other potential funding arrangements, which I'm going to talk about in a moment. So let's look at the time period. You've got up to 2 years. You don't need to take 2 years. You can do it all in 1 year if you want to, but you've got up to 2 years to complete this commercialization phase. You need to have agreed that, though, with the entrepreneurs program in the applications, because they will then agree to fund the company's requirements based on the cash flow that the company has to submit. And those payments will be made on a quarterly basis in accordance with what you have stipulated. The government has a small retention amount of about 15%, which they hang on to until the end when you get that, as long as you've submitted your final reports. Because like all government programs, it's important that there is a report written at the end, because the government department has to be able to go back to the minister, who then in turn has to go to Parliament and say, this is what the overall results. No names, but it's all part of the overall package. And they need to get that information. And unfortunately, some people don't cooperate with that. So the government's now got a retention on these quarterly payments to make sure that they're holding some money back, which you only get if you complete your side of the agreement. There's a quarterly report also has to be submitted to Oz Industry on behalf of the Entrepreneurs Program, which really shows how the project's going. Is it on target? Now let's look at the funding. The company's got to be able to provide matching funding for the Accelerating Commercialization Grant, if you want to go down this grant path. Now, you could raise capital to have the funding. And what's available? Well, the government created a special company about 4 years ago called the Early Stage Innovation Company. It was specifically created to make companies which achieve that status, early stage innovation company, attractive to investors, because it was too hard for a lot of companies to get financial support from investors when there was nothing advantageous around a particular company, because no one knows them. They're startups. So the early stage innovation company status is primarily targeted at young companies, and we'll look at that in a moment. Aged under 3 years of age, in some cases up to 6 years, but let's concentrate on 3 years. Turnover under 200,000 in the previous 12 months, not including any monies received under an Accelerating Commercialization Grant program. An expenditure in the previous 12 months under $1 million. So it's very small, and basically the company probably can't be doing anything else. Obviously, a company with a turnover of nearly $20 million is not going to meet the requirements to be an early stage innovation company. And the company must then be able to pass one of 2 tests. As long as it passes one, and it's a series of tests, it's not just one test. But for older companies, there are alternatives. We've got crowdsourced funding equity raising, whereby a company could raise up to $5 million in a 12-month period. There is a turnover test. You've got to be under $25 million. There's no expenditure test on crowdsourced funding. And there's no age test. And the other opportunity is under Section 708 of the Corporations Act to be able to raise up to $2 million from a maximum of 20 investors in 12 months. So that's available also. But you can only have 20 investors. Or you could borrow money from a bank or financial institution. But what that normally requires is security of an asset, directors or shareholders or someone else's personal guarantee, and then the company has to make monthly repayments to the bank or lender. Now, you don't have to undertake any of that when it comes to the alternative of being able to raise capital as a early stage innovation company or a crowdsourced funding company. So let's have a bit more in-depth look at early stage innovation company. I hope you like the concept of let's see what's involved. This legislation came about 4 years ago. Unfortunately, a lot of people don't seem to know much about it. And it's primarily targeted at young companies, that definition I gave you before. But then we get to the tests. The first test is known as the gateway test, and you earn points if the company has already done certain things. And the magical figure is 100 points has to be achieved. The first test area is research and development. Now, this is research and development that the company has undertaken that has been submitted in the company's tax return. If the company has spent more than 50% of its expenditure on research and development, it earns 75 points. Only got to get 100, 75 points. If the company has spent more than 15% and less than 50% of its expenditure in the previous 12 months on research and development, it earns 50 points. Not bad. If the company has already been admitted into the Accelerating Commercialization Program since it was incorporated, and bear in mind the maximum age is 3 years, it will earn 75 points. If it's been admitted to the Accelerator Program, it earns 50 points. If the company has already completed an arm's length capital raising of more than $50,000 aggregate, it earns 50 points. And that's capital raising by the issue of ordinary shares in the company. If the company's registered a registered patent or a plant breeder's right anywhere in the world, one of them, it earns 50 points. If it's got a registered design or an innovation patent anywhere in the world, it earns 25 points. And if it has a contract with an institution nominated under the Higher Education Funding Act or the Industry Research and Development Act, it earns 25 points. So that's the way you can make up the 100 points. Now you go through that and see what you come to. Now, if the company's only earned 90 points, all is not lost, because you then move into the next stage. So obviously, if the 100 points has been achieved, the company is qualified under the status early stage innovation company. In our system that we utilize, we have a documentation process where all of the information to support that 100 points is assembled so that that can be made available to potential investors. At this stage, it doesn't need to be submitted to the Australian Taxation Office, but it needs to be submitted when the company lodges its income tax return for this year. Because each of those steps that we went through is provable. The company's either got them or they haven't got them. And in the due diligence review file, we're going to include copies of those documents. We can then move to the principles test. Is the company genuinely focused on developing for commercialization one or more new or significantly improved, keywords, significantly improved or new, products, processes, services, or marketing or organizational methods? It's a pretty wide list, isn't it? That's the first question. And you've got to be able to answer yes. And the Tax Office and Oz Industry, who are the adjudicators of these submissions, believe that at least an A4 page for each of these questions needs to be submitted. Does the product give the company high growth potential? Can the company successfully scale that business? Will it appeal to a broader than local market? Will it give the company competitive advantage? So they're the 5 tests in the principles test. Now, if you can justify that and put it together in a report, which is what we would assist in doing, you can then submit the due diligence report, which has got all that documentation, to the tax office. It should go to them for approval, because they will then issue a letter within about 6 weeks, which says that they've approved or not approved the application for the status of early stage innovation company. Why is this important? Because the whole objective is to be able to raise capital. And when you sit down and talk to potential investors, you want to be either able to email them the due diligence report or hand them a copy of it, which has got all the information, so that they can sit down and talk to their accountants and other advisors and decide whether they're going to invest in your company. So these documents can be submitted to potential investors. So why is this of interest to investors? Because the government made it attractive for them. Because the government was getting pressure to try to help young Australian companies. Doesn't mean the leadership team or the directors are going to be young, just the company's got to be young. And this will attract investors, because the investors receive a 20% tax rebate based on the amount of their investment. Now, for a sophisticated investor, that's someone with a net wealth of over $2.5 million, they get a 20% tax rebate up to a maximum of $200,000. So that's been calculated on $1 million shareholder investment. And if they're a retail investor, the maximum that they can invest in a company is $50,000. The government didn't want retail investors putting all their money into one company. So the maximum retail investment benefit is $10,000. But the big attraction, I think, is if the shareholders hold on to those shares for longer than 12 months and less than 10 years, they don't pay capital gains tax, irrespective of what the result is. And at the end of 10 years, if the shares are still held, the company's accountants can prepare a revaluation exercise. What's the company now worth? And calculate what the cost of the original investors' shares are. And that becomes the new cost base for those investors. So that hopefully that means that when those shares are sold, the calculation of the capital gains tax will be reduced from what it would have been, because of the adjustment of the cost base made after 10 years. So who can help you on this journey? this innovation journey that for a lot of people is a closed shop because they don't understand how this can all be done. Well, we can at Towers Business Development, and you can check out our credentials on our website. I'm going to talk about that in a moment. So we can help you implementing a research and development system within your business, and we will liaise with your accountants to get that system introduced. And we will introduce a white label version of our research and development system into your computer systems. We can prepare the applications to go to Oz Industries for the Accelerating Commercialization Grant, and obviously give you advice on that. We can prepare the due diligence report relating to the status of your company as an early stage innovation company. Or we could advise you in becoming an accredited crowdsourced funding company, potentially able to raise up to $5 million in a 12-month period. Or we could advise on the process of raising capital under Section 708 of the Corporations Act. So that's the process we can do for you. We're happy to talk to you about this. So upcoming webinars in our journey of trying to inform small businesses and medium-sized enterprises about the services that experienced commercial accountants acting as a virtual chief financial officer are able to help you with. Research and development is the start of the innovation journey. A bit more detail on what we've talked about today. Thursday, the 24th of June at 12 noon, AEST. Having a virtual chief financial officer service could launch your business in 21-22. That's on Thursday, 1 July, one day into the new year. And you probably are going to need a very good financial management, corporate governance system to survive some of the challenges in the next 12 months. Grants can assist funding for research activities. We'll talk about that on the 8th of July. An early stage innovation company status, great for companies and investors love. So we're the incentives. So we're going to go into a bit more detail on the early stage innovation companies on the 15th of July. Now, to register for these webinars, all you need to do is go onto the Towers Business Development website, which I've now brought up, and it's on your screen now. And I will just make sure you have that. And you can view it by clicking at webinars up the top here. And there's the various webinars that I've just referred to. You click on the one that you want. And if you want to watch some of our previous webinars, please do so, because they're mentioned there for you to be able to go back and find them. So hopefully that will help you in that process. If you need more information on any of the services that Towers Business Development is able to supply to you, have a good look at our website, see some of the work that we have conducted or are able to conduct at www.towersbusiness.com.au, or send me an email, please, peter@towersbusiness.com.au, or make a phone call, 1-800-232-088. I would love to hear from you. I hope that I have demystified in some aspects the innovation journey. It's a journey that young companies can undertake, and I'm looking forward to hearing from you as to what assistance you require to undertake this. And we will then work with you and your accountants and any of your other advisors to ensure that the tasks that have been allocated to us are able to be undertaken. I look forward to talking to you again in the near future. Have a great day. Goodbye. And I hope that you've been able to get real information out of this conversation today. Have a good day. Goodbye.